Good morning, traders. It is Wednesday, June 7th, and it's about an hour before the open. Let's start with our last picks. Take a look at the market, see what it's doing, and then find some new picks using Option Stalker Pro. We've got a new feature. I'm going to be showing you how I would use it pre-open. So let's get started. AZUL. There were 4 picks that I highlighted on Friday. I really liked the market breakout, so we wanted to focus on the long side. To this point, I've been pretty balanced, sticking with day trades, sticking very short term. But now that we had this nice breakout through horizontal resistance on decent volume, we need to focus on the long side. We need to respect this breakout. We have pretty big news next week. We'll get into that in just a minute. So let's take a look at our most recent picks. The path of least resistance currently is to the upside, AZUL. I love this breakout. Let's zoom out just a little bit so we can see where our automated trend lines come into play. That is a nice high plus trend line. That is a nice high plus trend line. If I put up our past trend lines, you can see that there's a really nice one in here that was breached. The only reason we don't show it is because we've distanced ourselves from that breakout. So we don't want to cloud the charts up, but we have a breakout above all the major moving averages. So I highlighted this on Friday and then I did a video Sunday night. So the stock really didn't have a chance to move much. But that is the price action Friday, and that is the breakout that we were looking at right here. And I told you a lot of times on these stocks, it takes a few days for those gains to be digested. So first we get the breakout. The breakout is good because that is what gets the stock on our radar. But that's not where we make money. We make money on the follow through. And oftentimes, when a stock makes a nice breakout, it's exhausted a lot of its firepower. You get some profit taking that comes in, and it takes a few days for the stock to digest those gains. So you have to be patient with these. Eventually, buyers are going to prevail, and that profit taking will subside. And when buyers see that there's not a lot of profit taking left, what do? They get more aggressive. And that's exactly what happened with AZUL. So you could have looked at the stock Monday and gone, oh, I guess this is not really that good of a pick because the stock's not moving higher. And then out of nowhere, yesterday, Tuesday, boom, big rally. Nice pick. So Amazon, that was another one. Let's take a look at Amazon, see what that's doing. As I mentioned, this is a choppy stock, so it doesn't go straight up. Couple steps forward, step back, couple steps forward, step back. That's the pattern with Amazon, so you have to be a dip buyer. But you can see the stock has been edging higher. The market, incidentally, has not really been moving higher with any kind of gusto recently. So, yes, Amazon looks good. Let's zoom out. And this is why I really like this breakout. This is a very long-term breakout. These are our automated trend lines that we draw. It shows the ones that have been breached in the last 10 days, and it also shows the ones that are pending that are within 5 ATRs. So that will give you an idea of how high the stock might possibly go before it hits resistance. So this is the first resistance point that we should see on Amazon, and that will help you plan your trades. But these are nice breakouts. That is a beautiful breakout. That is a beautiful breakout. We've got a lot of good things working right now for Amazon. It's above all the major moving averages. It has relative strength. And look at that volume. It's also moving higher against a weak retail sector. So good news. I like Amazon. I think that still works out well. IoT was another stock that I had highlighted on Friday. Look at that baby go. That is an incredible breakout. So you've got this high plus breakout right here. Let's zoom out a little bit, take a look at the price action on this one. You can see this stock is continuing to push higher. That was a high volume post earnings breakout. That's why I liked it. And there you can see the 5-minute chart. So this is the price action Friday, and we put this on our watch list. Friday morning when I did that video, and the stock has continued to push higher. It still looks nice, might be getting a little bit overextended at this juncture, so I would be waiting for any kind of a dip or a pullback to buy that one. TTD. That was another stock that I highlighted on Friday. We had this really nice breakout. Stock has not been able to get back to that breakout yet. I do still like the chart. Let's go into that D1 and you can see these are some of the trend lines that are coming into play. They're providing a little bit of resistance. This is kind of a slow moving, herky, jerky little stock, but it is inching its way higher. I like this breakout here. I like that breakout there through that longer term trend line. So I still like TTD. It's just that it needs to digest these gains a little bit longer, work off some of those profit takers that are in there. The bid will strengthen. The stock will continue to move higher. It has lots of blue sky, meaning it has lots of room to run once it gets through this downward sloping trend line. So yes, I still like that stock. So then I did a video Sunday night. MDB was the stock that I highlighted. Another one with great technical breakouts through resistance lines on heavy volume, good relative strength, post earnings gainer. So this stock has actually done okay. It was inching higher yesterday. So there's the Sunday night video I'd mentioned. Okay, here we've got a really big breakout on this stock. It went up from basically $295 to $395. That is a huge percentage increase. Well, we don't necessarily want to chase a stock that's made a 33% overnight gain. This is exactly the kind of stock that is going to see some profit taking, and it's going to take time to work that off. That is supply. But the underlying premise is that, holy cow, this was some really good news for the company. For it to make a move of that magnitude tells us that buyers are still in there and the stock has been able to hold most of the gains. So this one's still going to take a little bit of time to digest those gains. Once it does that, buyers are going to start to get more aggressive when they see that they can't buy at a lower price. They'll start moving their bids higher and the stock will stage another move upward. But you can see downward sloping trend line here, major downward sloping trend line here, and look, right at our automated trend line, the stock is starting to find resistance. These lines are incredibly accurate. I think you're really going to like using them. So yes, watch for the stock to move sideways for a while and then to stage another leg higher. I still like MDB. We're going to use an alert on that one to try and buy a dip. That's what I had put in the last video. Use M30 and LRSI, set that alert so when LRSI goes below 20 and then it climbs back above 20, you'll get your alert and then you'll know that the stock has made a dip and it's starting to regain some of its strength. That's how I would approach it. That's a great tactic to use anytime. So let's go back to an earlier point because it's a really important one. So if you're following a stock and the stock is stacking some green candles on heavy volume, it's got the D1 breakout that we're looking for, it has everything. Put it on your watch list and then the stock continues to move higher. Eventually you get to the point where you're like, yeah, this stock is strong. I'm just going to buy it here. So you enter the trade, and then all of a sudden the stock dips. Now, I'm not talking about the bottom falls out. That can happen sometimes, but not very often. The alerts are going to help you be patient, and they're going to help you wait for those dips. And the way that they work is, let's take MDB as an example, and let's use a shorter time frame. We have a lot of variables that we can use to try and buy these dips. Now, one of them would be to use OneOSI. And so you would wait for OneOSI to be less than 0 and then greater than 0. So you would not be in here buying until it's able to get greater than 0. We can also look at IoT as an example. I think that one sets up pretty well because the stock has been continuing to move higher. So yesterday, the market was very, very flat. So the fact that this stock didn't move much is not a surprise to me. But the way that this idea would work is that instead of rushing in and buying here, you set an alert on it and you go, you know what? I'd like to buy IoT when the relative strength goes below zero. Well, it's above zero, so that's a problem. How am I going to do that? Well, we want to buy it when it dips below zero and then comes back above zero. And so this would be our trigger for the alert. And then we look at the stock here and we go, well, you know what? It's not really that strong relative to the market, and it doesn't have the volume that it was showing earlier in the day when the stock was moving higher. So maybe I'll take a pass on this one. Maybe I'll reset that alert so that I can catch the next dip. But ultimately, it's forcing you to be patient and to wait for those moves lower. We can take a look at some of the stocks yesterday. In fact, let's depart very quickly here and just take a look at the market. So we've got our market bearings because market first, market first, market first. We always start with the market. So let's zoom out very quickly. Then we can see those D1 breakouts that I had referenced earlier. So this is a daily chart of the S&P, and you can see how it's continued to move higher and it's broken through this horizontal resistance level. And let me put the SPY up and not the ES. And there we go. So let's put the trend lines up. You can see that there are major trend lines that have been breached to the upside just last Friday. That was Friday's price action. Volume was actually quite good. So the market's not been able to advance the last 2 days, but this is a pretty decent longer term breakout, and we're about 20% off of the low. So nice move, very concentrated move. Mega cap tech is getting all the love right now, and 12 stocks have accounted for all the gains in the S&P 500, so that's not particularly healthy. Next week we have the FOMC statement coming out. There's about a 30% chance that they raise by 25 basis points. Most analysts believe that they are going to pause. Why? I'm not sure. Because if you're the Fed and you've been pounding your fist on the table for the last year saying that you want to raise rates, this is the perfect environment to do it in. Inflation has not subsided. It came in at 4.9%. That's the CPI a month ago. That is way above their 2% target. CPI, by the way, is going to be released Tuesday. So we'll get that look, and then we'll get the FOMC statement. Now, jobs have been incredibly strong. 339,000 new jobs created during the month of May. We got that number last week. Well, there's no worry that the tightening is going to impact economic activity or the labor market. So the Fed has breathing room in that respect. The market is almost at a 52-week high. So certainly investor confidence is not shaken right now. So the Fed doesn't really have to worry about that either. They've said that they're not overly concerned about the banking credit situation right now, but they are looking to raise bank reserve requirements by 20%. That is a form of tightening. Why would they do that if they're not worried about credit concerns on the regional bank level? There would be no need to do that. So obviously, they are concerned. They just don't want to shock the market and say that, yes, they see that there could be some possible issues in the banking sector. So they really, apart from any kind of credit crisis, have every reason to be able to hike rates 25 basis points next week. We'll see what happens. Now, the market is also pricing in an 80% chance for 25 basis point rate hike in July. So there's a little bit of a disconnect there as well. CPI, FOMC, those are going to be huge events next week. The debt ceiling can was also kicked down the road for 2 years, so the Fed doesn't need to worry about that either. Again, another reason why they could possibly go 25 basis points. They're really focused on getting inflation down. I don't know what they're going to do. That would be a shock to the market if they went 25 basis points next week. We'll see what happens. It could be that they feel that if they raise bank reserve requirements, that in and of itself is a form of tightening and that they don't need to go the 25 basis points when they move forward with that plan. From my perspective, I'm still keeping it kind of short term. I want to make sure that the banking situation is not going to be a problem, and the market tends to err on the side of moving higher. It doesn't care if there's smoke, it only cares if there's fire. And right now we had a couple of bank failures, but 3 months have passed. We haven't seen any other bank failures. Everything is fine. We also saw this similar pattern in 2008. Countrywide was purchased. Okay, that problem is gone. Market rallied. Everything looked great. And then it wasn't until about 6 or 7 months later that everything started to manifest and the bottom fell out. Do I know if this is going to be a repeat performance of 2008? I don't know. I don't know that at all. I'm just saying that from my perspective, credit is the one thing that can really lead to sustained selling, and it takes time for this to unfold. I'm going to give the market that time. And PE ratios are fairly lofty at current levels, so I'm not overly excited here. Much of this rally off of the low came on very light volume. And the move was very stair step, mixed overlapping candles. That's a sign that there are buyers and sellers and that this is just a gradual float higher. So, as much as I like this breakout right here, I'm still keeping my trades short term. These are just some things that you need to be aware of. Watch for that FOMC statement and that CPI next week. By the way, if you take a look at VXX or VIX, the option premiums are minuscule, and you can see how option implied volatilities, which measure uncertainty in the market, and they measure confidence to a large degree, have just plummeted. So nobody is looking for a shock event or a surprise event. And that is typically when you're going to see one because no one is hedged, and that is when you oftentimes will get a pretty big move. So, just these are some things to watch for. We trade what's in front of us, and right now, the price action is telling us, okay, we got a nice little breakout. Let's go with it. Let's find the strongest stocks. Let's focus on the long side. So, here I am before the open, Wednesday morning, June 7th, S&P futures are up about a point. How am I going to approach this trading day? Well, if I take a look at the price action yesterday, the blue line below zero indicates very, very light volume. You can see this was an inside day. We poked below the prior day's low, but just briefly for the first couple of candles during the morning. Nice bullish cross here on 10P. This was a good entry point. The fact that we were able to recapture this first long red candle immediately told me we're going to fill this gap in here. This is a good bullish cross. This is one that you're going to want to buy. Plus, we've got support here at the prior day's low. It's a nice entry point for a long, but after that, you got to take profits in here at some point because the price action is just not that strong on the way up. Mixed overlapping candles and light volume, take your gains. Now you get a bit of a double top in here, which tells you there's probably going to be some resistance and there's probably going to be some selling pressure. For most of you, you really should be in a long only mode. If you find a spectacular short or two, sure, you can put those stocks on with relative weakness and that'll serve as a little bit of a hedge for you. But in general, your mentality should be, I want to buy dips. I want to buy dips. I want to buy dips. We've got a nice market breakout, so wait for that support and then buy the dip. So you get this herky-jerky move lower, and you can see you get this nice long red candle that follows this one, but by the time it finishes, it's a bullish hammer. So the market bounces right back and it challenges that high. And this is not particularly strong price action either. But as we get into the last hour of trading, we can see that we have a higher low double bottom. Okay, that's kind of nice. We can also see lots of tails under the body here, which tells us that sellers come in and they try and push the market down, and boink, comes right back because the bid is still there. Sell it off, rally it back, sell it off, rally it back, sell it off, rally it back. These tails are a sign that support is starting to form. And this new low right here is what I call a marginal new low. It's not a substantial new low. It's barely below this low right here. So that's like a little double bottom right in here. But for the day, higher low. This is encouraging. And now we get a bullish 1OP cross with all these tails, higher low double bottom. Now the market puts in a couple of nice long green candles. On a choppy, chunky market day, do you need to bite on this first little bounce? No, you don't have to. Let's be patient. Let's see what happens. Here's a little red bar that tries to retrace this. Now we get a nice long red bar that actually challenges the open of this green bar. Hey, this is it. Sellers are going to try and take this baby down right here. Boink, bounces right back up. This to me was an excellent tell that these two candles are legit, that this support is legit, plus this is above the prior day's low, which was right in here. This is where the day started. So yes, this candle, this little bullish hammer right in here tells me everything I need to know. Tells me that this is going to be a good bullish 1OP cross, and then I've got all the other price action to confirm that this will be a nice entry point, and then the market rallies. So you have to pick your points. If you can read price action, it's really going to help you out. I hope that this little lesson helps you identify those opportunities. What I would not suggest for anyone that's a novice trader that's just starting out, when you come into the day, you've got to be thinking buy the dip, buy the dip, buy the dip. So don't get cute and try to start shorting in here, because every time that the market has a bounce like this, you're going to be thinking, oh no, I should be buying the dip. And now I'm short, and this market is going to continue to go higher and add onto that D1 breakout. Just know that there is a bid out there and that you should be focused. You should be patiently waiting for those dips. Wait for that support to be established. Wait for it to be confirmed, and then trade long only. So let's take a look at some stocks. Let's see what we can find this morning. And I move this along. I'm just going to go into Green Royal Flush, and I'm going to click on the top stock here. We could take a look at some of the top stocks. I'm going to have the automated trend lines up, and you can see that this was a big gap up through. This was support, now resistance. Gap has been filled. That's nice. It's through all the major moving averages. That's nice. Let's zoom out a little bit. Whoops, wrong way. Take a look, see what's going on here. I'm not crazy about this. I like this breakout. I like this pattern. Very choppy stock in here. I'm going to try and find a little bit better. So we're going to continue to go down. MA, nice support here. We've got some upward sloping trend lines. Kind of choppy and chunky. Yes, it could try and regain this. We've got a nice bullish hammer right here. We're through the 100-day moving average, so not bad. MA is kind of a choppy stock. Yeah, I could see it continuing to push higher here. Not bad. I'm really kind of looking for these nice technical breakouts. So this has got some resistance here. So I'm not overly anxious about that because it doesn't have a lot of room to go. Keep looking, see what we've got. Okay, I like this. And let's zoom out and see where these trend lines originate. And here we can see that's a pretty major trend line, but we've got a long way to go before we get there. This is a pretty major trend line. Long way to go before we get there. This trend line right in here, I really like. You can see it comes right down through here. That is a beautiful trend line breach. I like this stock. It's through the 200-day moving average. There's a horizontal support level right here that it found support at. So that was support. Now it's resistance. Stock breaks below it, and now it rallies up to it. And now again, it is support. Little trend line forming in here. We've got this high plus trend line broken to the upside. We have this high minus trend line broken to the upside that's had many touches. It's an old one that dates back to a year ago, April 4th, 2022, and we're through the 200-day moving average. All right, I got me a good one right here, and look at this volume. Okay, also excellent. So let's zoom in just a little bit so we can get a little more granularity. I like this. This is a nice little compression breakout right in here. So this is exactly the type of thing that I'm talking about too. When you get these moves higher, this is a post earnings gap higher. Hey, awesome. This looks fantastic. So you get this gap higher. It takes a while for these gains off of the low to be digested because there are going to be some buyers down here on this support level. Now they get the gap higher and they're going to be locking in some of these gains. So there's some selling pressure. Eventually that selling pressure is worked off and buyers see that they're not going to have a chance to buy in this gap anywhere because the stock is not retracing in there. It's because buyers are still lined up. So you get this compression. This is the price digestion that I'm talking about. And now we've got the compression breakout right in here. We've got these two major trend lines that the stock has been able to move through, and we have excellent volume and relative strength. BLL is your stock pick of the day. So here I am, super anxious. Market's going to open flat. Market hasn't been doing anything. We had an inside day, low volume. We're waiting for the FOMC statement. We're waiting for the CPI next week. Do I need to rush in and buy BLL on the open today? And you can see stock had nice price action yesterday, but it did have dips. Okay, so we want to take advantage of those dips. You get a rally. Look at that. That would be a nice entry point right there for a trade. When the stock loses its relative strength a little bit because it's made a nice run, it's not going to be able to keep this pace all the way. Stocks do not go straight up or straight down. They take a pause. Well, this is a beautiful percentage gain, so it outperforms the S&P 500 by a big margin. Yeah, it's going to take a little bit of a pause, so it dips just below zero, and this is your entry point. You enter there, you got a nice $2.50 winner through the course of the day. So now I would like to use a similar tactic. And the beauty of setting alerts, I'm going to right click on the chart, I'm going to create an alert, and I'm going to say strong versus the S&P 500 on a 5-minute basis. And I'm going to add that as a criteria. First, I'm going to check to see what the M5 is for the stock, and you can see it's below zero right now. So I'm going to just wait for it to go above zero. That means that I don't have to mark this true false box, and this is a really important feature in our new alerts. So I'm just going to save it, and so now that alert will be working. But let me go in and describe what we're doing here. In this particular instance, OneOSI that measures relative strength was already above zero. So I needed that particular indicator to go negative below zero and then positive. So that's when I would mark that true false box. So let's go in and create that alert, and I'll just show you what it looks like. So if I went in and I did strength versus SPY and I wanted to add this, I would add it like that. And in this instance, right back in here, since it's already true, I need it to go from true to false and then to true again right here. Then I would mark it. And what this enables us to do, super powerful, is now when I see those really, really strong stocks early in the day, and in fact, for any of our searches, you'll be able to right click on the entire column and create an alert based on every stock that's in that search. So when I see those super strong stocks early in the day, the condition is going to be true. I need it to go false and then true, and that will be my little dip and my buying opportunity. You'll be able to use this. You can already use it for buy and sell signals. You can use it for LRSI. You can use it for heavy volume. And heavy volume is actually a great criteria to use. So let's go through that exercise. I'm going to show you how to set that up. So create alert. And I already know that BLL, I want that strength versus SPY. So I'm going to add that. And I'm going to add 1.0 volume on an M5 basis. Maybe I'll go higher. Maybe I'll go M15. So give me a few bars when I see that heavy volume. I also want to have that present as well. Finished with good volume at the close, so I'll probably need it to go. I don't actually care if it goes false on this one. I just want it to be true, and I just want the heavy volume constantly. So that alert is set. So if it has relative strength and heavy volume this morning, I'm going to be entering that trade. And that would mean that this morning the stock is going to have to open strong relative to the market on heavy volume. I'll get an alert, maybe a good entry point for me right away. As the day progresses, if I see BLL poke above the zero line, then I'll want to come in and I'll want to set that condition so that it goes false, true with heavy volume. And I can do that for any stock. So when the market is floundering around, it's going sideways for most of the day, you don't have to rush in and buy. You can wait for these pauses, and these indicators will allow you to buy those dips. Take a look at a couple of other stocks, but I like what I see. EXPE was just gorgeous stuff yesterday too. Man, we were all over that one yesterday. I love that. Do you see how easy these stocks are to find? They're in our searches. You can see the automated trend lines. You can see the breakouts. You can see the relative strength. You can see the volume. You can set alerts. You can buy dips. Folks, that's where we're going with all this. We're just getting started with our alerts. We're going to be adding every variable on every time frame. So you're going to be able to set up some very sophisticated alerts, which, by the way, they work great on a swing basis as well. So when you see a stock, and you go, gee, this is a great breakdown. I would like it to go strong relative to the market. And then as soon as that condition turns false, like right in here, you're short again. You can see. So it went positive. So now it's got relative strength after a big drop like that relative to the market. So now it's relative strong. And as soon as it ticks to relatively weak, you're back in that. Right in here, and then you get your next big drop. So yes, absolutely, we're going to be using this on a swing basis as well. Do you think this could work well as an exit strategy for your current portfolio? Or we're going to be adding these alerts to the portfolio screen too, so that when the condition goes from true to false, you'll know, hey, the stock is starting to get weak relative to the market. I may want to consider taking some profits. How much is up to me? I could get out of the entire position, or maybe I just start reducing risk a little bit. Thanks so much for watching, everyone. Good luck with your trading. I'll do a video Sunday. We'll see you then. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.